Hurley Investments market view commentary, and I'm starting out with it came to me, I enjoyed it, and I don't want you guys ever to feel bad about making money. You're supposed to be making money. That's what you do. Your job is to make as much money as you can, as safely as you can. If the wealth of rich capitalists comes from the exploitation of the poor workers, then we might expect to find that where there are larger concentrations of rich capitalists, we would find correspondingly larger concentrations of poverty. But the hard facts point in the opposite direction. There is a lot of crime and there's a lot of poverty in big cities. But in big cities, there's also a lot of opportunity for people to better themselves. And it's interesting. And can anyone guess what the lowest per capita income comes from? What do you think is the lowest capita per income according to well, I'm going to give it away, but according to the farmersassociation.gov. What is the lowest per capita income? And hopefully someone will type something in so I know you can still hear me. If it comes from the Farmers Association per capita income, what is the lowest producing income per capita? You'd think it'd be teachers, right? It's not. It is not teachers. Farmers are the actual lowest per capita income job per se that's out there. And that's primarily because so many people in farming are heavily in debt as they move from season to season. Okay, here we go. Let's go to our education. We're going to spend quite a bit of time today on simple education because people have been asking me about this. What is the problem, or why is volatility so difficult? We're still getting a lot of questions about volatility. Can someone tell me, why is volatility so difficult? So here we go. Volatility is based on emotion. Why is volatility so difficult? Based on emotion or news, usually. But other than emotion, what makes everything so hard? What makes everything so hard when it comes to volatility? Okay. Well, for the most part, when I heard volatility, the two things that I heard recently are spreads widen and the fill prices suck. Is that fair to say? Is that a typical fair comment that maybe you guys are just saying, hey, I'm going to be a little difficult? Don't want to answer it the way it's said. But is that a fair way to say, hey, the spreads widen and it's harder to get filled? The fill prices are harder to see? Because I've heard a lot recently, for those of you that are trading, you've told me, hey, it's not working. The volatility is hard. Well, I just wanted to bring this one up because I found it pretty interesting to show you guys. Volatility. Come on, Kevin, type it right. Volatility does work in your favor. And on this particular day, we have a couple things that are on this position that I wanted to share with you. So in taking a look, the stock today, as I was showing it, oh yeah, I can do it that way. Ooh, I really like this now. Okay, I'm learning how to use more of this more and more. Hopefully this doesn't turn us off. Nope. All righty. Taking a look in green, Google lost $375. And in real life, you should not lose more. How do I say this? The short call should not make up more than the stock loses. But if you take a look on this particular day, the stock lost $375 and Google on the short call was making up $514.35. If you take a look on a down day, same thing on the spread. Long positions down $98.10, making up $427. Pretty neat to see the difference. Pretty neat to see the difference on how volatility works in our favor when sometimes we don't understand it or don't see it, right? There are times we're just like, for crying out loud, this isn't making sense. This is not what I want to see. That volatility works out in a great way to help you out during the day. It's just a matter of time of understanding where that volatility helps you out during the day. I have another one with volatility that is exactly the same thing. So I really don't need to show you. Oh, is it a different day? Nope. A little bit different. Volatility using the short call protection. This is actually, well, this is the different day. 10 days later, we have the same thing happening. And again, I don't know how to explain it any better than taking a peek and saying, hey, look at how much the volatility there at the bottom is working in our favor on the stock. The stock losing quite a bit. No other way to say it. The stock was losing $2,345. We were making up $2,389. Well, Kevin, it wasn't working on the spread. That's correct. The spread was losing $135.20 more than the shorts were making up on the volatility. But the only point that I'm trying to share here, volatility doesn't mean you're losing money. Volatility doesn't mean that your positions aren't going to be protected. Sometimes it just means you have to wait a little bit longer for your protection to start to make up the difference. And sometimes volatility like in a short call position, even though it is in the money, can act just like put protection. It's really fun to think about it. If we have another 2008 scenario, we're going to go a couple contracts of puts. We're going to go in the money covered calls. We might make up $2.80 on every dollar down that your stock moves. We have learned how to use that volatility to our advantage and help us protect. A couple of you had this comment again, and I've done this now twice. We're going to do it one more time. We have some spreads that are out there, and if I can use my drawing tool one more time, kind of neat. When you see a little C above the position, you're going to see another one down here. That little C means we already have a closing position that we have in place for this trade. But let's work on the 450, 350, 450 bull call. We're going to do the numbers and work them one more time for you, just because it's obviously there's something that I'm saying that people aren't understanding. So I want to make sure that you guys get what the difference is, because it's going to be important. Plain and simple, it's important to understand what's happening and why. All right, difference in two strike prices, 350 and 450. If you subtract them, it should probably be the other way around. Our difference is $100. The last traded price, if you take a peek here, your bid is $64. Your ask is $90. The last traded price is $77.35. When stocks expire, the difference in these two strike prices is going to be the closing price on your stock. In this particular trade, there is a chance that we might make $77.35. So maybe if I close now, I could make $77.35. Booking looks like that is $44,720. The question to you guys is, what do I leave on the table? And it's a pretty simple mathematics. $100 minus $77.35. Doing my math, $22.65. We're talking 10 contracts. So doing the math there, times 1,000. If I exited this trade right now, we would be giving up $22,650. Does anyone know where Micron is trading at? Micron closed today at what? Oops, someone has an answer. 1,000 plus. That is correct. But I need it more than that. Micron today closed at $1,035.50. $1,035.50. Which means Micron has to lose 450. Micron has to lose $685.50. That's probably 500. 54. Yep, it's 500.50 before we would lose any money for the possible max profit. Someone also made the comment to me today, well, why don't we close like anything above 500? We have a 510 600 out to June. Looking at that one, that has a possible $90 of potential profit. Now, when you see that C, we actually have closed them or set trades to close at about, if we're at $90, we're looking at $88. But $90 of potential profit. Currently right now, which I mean means that that should equal 90K. For us, it's going to equal closer to 88K. If we closed it right now, how much money would we make? It's that middle trade. If we closed it right now, how much money would we make on that trade? Currently at a profit of $12,000. $376, right? Cost basis. Our cost basis in this trade, $26,750. Maximum profit, 90K minus the $26,750. I'm going to get a calculator so I don't mess it up. Calculator, 90,000 minus 26,750 bucks means we have a potential profit of $63,250. Ooh, I'm sorry. Nathan, you are correct. Cost basis of 14,000. I'm not seeing everything as easily as I should. 14,374. And if you're wondering where I'm getting this from, I am getting it on the second trade. There's my cost basis. There's my current profit. That's how I'm working all these numbers. Which means this number is going to be even better. $14,374, which means our potential profit should be 90,000 minus $14,374 means our potential profit is $75,626. We aren't in trouble until Micron trades below $600 or loses $435. Here's a question to this group. Right now, with the way Micron is trading, are you comfortable cashing out your 450, your 350, 450s for $44,000 of profit when you still have $22,650 of profit? When those are the farthest ones in the money, where Micron has to lose $585 until you start losing your maximum profit opportunity. Another way to say it, Micron has to lose roughly 58% of its value until you are at risk at losing your $44,000 of profit that you currently have, at risk at losing your overall profit that's closer to like $66,000. I could ask the same thing. If you're going to close anything, you should close the ones that are closer to at the money, the 5, 10, or 600s. But question for the group, let me know. If you were in the 5, 10, 600 trade, would you want to close it for $12,376 of profit now, leaving on the table roughly $62,000 of potential profit? What do you guys think? Who's in favor of closing these down right now and taking a profit? A couple of you made the comment, hey, maybe we could close it down Monday morning. And a couple of you might be pissed because you're like, damn it, Kevin. I said maybe we should close it down Monday morning. Well, Micron went up $64.50. If it's going up $64.50 and it's up another $4 after the close of the market, I had a really hard time listening to you because of your feelings. Please don't think about the market. Don't trade on your thoughts. Don't trade on your emotions. Trade on facts and figures. I don't know if you guys have noticed, but right now, we are in a buy high and sell higher market. Doesn't happen often. Micron was fully valued at the end of last year at closer to $275. But I can't wrap my head around these numbers. A lot of you are in the 710 800 bull call, which has a potential closing price of $90. Difference in two strike prices, right? Currently, our cost basis is $8,700. Worth $12,465. It's the bottom three contracts. We have a profit right now of 3,000. I think that says $765. Potential profit. Potential profit. 300 times 90. Three contracts. Potential profit is $27,000. Closing amount. Minus our cost basis. Cost basis is $8,700, which means our maximum potential profit in the trade right now is taking no more for these three contracts. I'm sorry. For these three contracts, 27,000 minus 8,700. $18,300. You have less than 15% of the total potential profit in the trade. The top one, you've got like 66%. The middle one, again, you've got about 16% of the potential profit. We're waiting on time right now. Asking this group as a question. I won't name names. What would you do? Would you take your profit and run? Or would you give yourself an opportunity to make more profit by just being patient? What do you guys think? What would you do personally? What do you guys think? Russ Kramer. Has Micron added an inflatable price now? Well, it's high. PE is 48. But boy, I mean, is it making some money right now or what? Earnings per share, earnings next year. The earnings next year are already there with pre-orders. Can it go down? Definitely. But I don't see, as I'm looking through all this, short floats above 1%. People still have to cover that. This is a Goldilocks situation. Fundamentally, every time it goes up $100, we should be adding new bull calls. So very interesting comment. Is Micron at an inflatable price now? Is Micron starting to go down as fast as it goes up? This definitely should be looked into before you make your decision. But everything fundamentally says we have some time to run. We look so good right now. It's kind of unbelievable. It truly, I'm shocked. I'm absolutely shocked. Okay, I only had one person that came up. What would you guys do? Would you take the profits and run? Or are the numbers convincing that you might want to stay in it a while? I see a lot of you are quiet today. Here come a couple more comments. Staying with a quick exit plan. I really like that answer. Are you shocked with profits in general? Or are you just talking specifically about Micron? I'm just talking specifically about Micron. Fundamentals say let it run. Correct. With so much opportunity, I might let it run a little bit more. I would agree with that statement. These are the decisions that we're running up against when it comes up to looking at what's going on. It's kind of neat. I showed you Google up above. On some down days, we've still made some money in these spreads on down days. Down days in that $35 range. I could go through some more, but I really want to get through everything. I don't know if it makes any sense that we should keep going farther. I'm going to work the numbers before I post this so you can see the rest. Earnings. Really, we don't have Micron for a while. I did not add in the big picture this week. I will do it. All of our markets bullish and pretty close to being oversold or oversold. Usually markets don't run oversold for long, but we're basically running through a 2-month stretch that they are. So, if you were to ask me where you'd end June, I'm going to say flat right now. The biggest concern for the month of June is our 16th, 17th FOMC meeting with the new president. If he's like every other new FOMC president in history, he'll talk too much. Something he says will scare the market, and our market will go down. We are going to watch and pay specific attention to the 16th and 17th of June. Earnings, not much going on. Hewlett Packard Enterprises, Ultra, Broadcom, CrowdStrike, Macy's, DocuSign, Lululemon. By way of economic reports, it's the average work week on Friday. That's the biggest move in our market. We could see the market head up this week just like we did last week again. When it comes to some of the articles I've seen, I couldn't get the Jeff Bezos one to show up, but I have the link. Jeff Bezos thinks that AI is going to create more jobs and elevate workers. Really interesting article on how Micron hits the first $1 trillion market cap for the first time as the stock surges 19%. Goes through how there's room to run on Micron. Of course, a Mandalorian and Grogu. Lowest ever Star Wars opening film, which is not quite correct. There have been 2 others that were lower. But Disney's getting some bad press right now. Leave it to Jeff Bezos. It says bottom half earners should pay 0 in income taxes. I like someone that wants to pay more taxes when they're a billionaire. I really hope that that's true and that he has a push towards lower taxes. Google, IO Primer, Alphabet's AI Showcase has a chance to wow Wall Street. Some good information on why Google can go higher. With that said, and I know I spoke at you a lot today, what questions do you guys have that I can answer for you? What questions do you guys have that we can answer for you? No, good comment. Mod, I probably mean overbought if I said oversold. Excuse me. Nathan, is it a good time to load up on puts with Micron? Well, the short answer is if you did it at 700, you lost money. If you did it at 800, you lost money. If you did it at 900, you lost money. Technically speaking, the question comes down to, would you put a bearish position on a bullish stock? People have been doing it for the last $300 to the upside. And they have literally been getting their butts handed to them by, lack of a better term, not following technical analysis. Technical analysis is level 1 material. Fundamentally, Micron solid. Technically, it's bullish. Sentiment, it's shooting through the roof. Analysts' expectations, it was just raised up to 1635 as its target high price for the next year. Why would you put a bearish position on a bullish moving stock? 700 was too high. 800 was too high. 900 was too high. The people that I knew that loaded up on puts on each of those pricing on the stock got their butts handed to them. And we're talking like $52, $54 to buy a long put. One contract, $5,400. If you're in these spreads, can you imagine kicking off? You know, I'm going to go back to those spreads really quickly. Can you imagine on your 17 at 800 bull call losing basically $5,400 because you think it's going to go down and it eats up your $3,765 of profit? How about if you had to do it for, and that was just one contract actually. Imagine if you did 10 contracts and you ate up $54,000 of your $44,720 of profit on that upper spread, the highest spread there. It's an interesting question. But right now, we're choosing to follow the trend. A couple people said it. We're on a hair trigger to take some profits. We see it. But for these prices, we're out to March and we're out to June. If we had a pullback, we have plenty of time to let the stock recover on a fundamentally sound stock. Does it mean we might not add a couple puts to chase it down a little bit? Probably. But is now a good time? All I know is the people that put it on at $700, $800, and $900 got their butts handed to them trying to outthink the market. Our job is not to think what's going to happen. Our job is to research and let the numbers talk to us. And everything that we're seeing right now says Micron can still go higher. Is that a fair answer to your question? Because I know we're all thinking it, right? We're all thinking, oh my gosh, it went up from $450 this year up to $1,000. Thank you. I appreciate you asking the hard questions for us. Anybody else have a hard question they want to answer? If not, the thought process tonight is this. Volatility is not always your enemy. It makes investing harder, but there are times that it helps you just as there are times that it hurts you. Don't think. Don't think you've got the market figured out. Research. Research, find numbers that justify why you might make a decision. It's really interesting. We're in a market right now. Sell low, or excuse me, buy low, sell high, buy high, sell even higher. The beauty of opening up our economy. Do I think this will happen in the next 4 years? Probably not. Probably with our war in Iran, what was said today, Iran's like, we're going to block the Strait of Hormuz so no one can get through. Well, the United States is already doing that. I mean, good job saying you're going to do something that's already happening. But our sticky inflation, everything that I'm seeing for energy wise right now, the way people are starting to hoard and save a little bit more, wouldn't surprise me if our war with Iran causes our next recession where we have 2 negative quarters of GDP. It'll be interesting because it will probably start August, September, October. We'll probably have a great run into Christmas. And then the next 2 quarters, January through June of 2027, the costs are just too high. It'll start the dominoes for a recessionary period of time. But at the earliest, we're looking at August. The question about getting out of these positions will probably be more important in August than it is right now. Guys, I appreciate you letting me spend this time with you today. I'll work those numbers on the other explanations. Guys, appreciate you being here. I hope this was helpful. I'll work on getting some of these other numbers filled in. But the real question comes down to, do we leave so much opportunity on the table right now or not? And again, for those of you, the end of last week, they were like, oh, it's down $35. We got to sell. It's up 100 from last week on the lows. I think you follow the trend, even on a couple bad days. Appreciate being with me here. I look forward to talking to you next week. Thank you for attending, and we'll talk to you then. Bye-bye.